Good morning and welcome to the Leadership in Insurance podcast, otherwise known as the LIP. I'm very lucky to be joined by Antonin, who is the COO of Allphins. Good morning, sir. How are you doing?
Good morning, Alex. Thanks for having me.
Where are you? Are you in Paris at the moment?
Actually, I'm back in France. I'm in Marseille, in the south of France.
Very nice.
That's a good place for the lockdown.
Yeah. I've managed to escape London now. I think when we first spoke, I was in London, and London's my favourite city in the world. I think it's tough. There's a fight between New York, Paris, and London, to be honest. But during the winter months when the clocks changed and I was getting up and it's dark, and then it's dark when you finish work, and you're not allowed to do anything at the moment. It sort of defeats the object. So making the way to the coast seems to be the right idea. But obviously, we've touched base, and Allphins is somewhere that a business I'm aware of. But it'd be really helpful to everyone to introduce Allphins and what it is that you guys do.
Sure. So Allphins is a data analytical and exposure management platform. We started to focus on the energy class of risk. And now we are expanding across the specialty risk, so covering energy and soon covering cargo, aviation, and so on. What we are is really a combination. So we are a software as a service. We developed a software as a service solution to help clients structure their data and extract some insights to make better underwriting decision and have more insights about their exposure. It enables them to take better risk decision, but also to better optimize their portfolio and capital allocation. So that's Allphins.
That's a much better overview than I certainly would have given it. I was like, oh, it's an exposure management data analytics type tool. But before we get into sort of how the product works, this is becoming an inherent theme of the podcast. Is you've either got people that have had really unusual, choppy, changey careers, or people like yourselves who sort of come from outside of the industry, but it's quite closely parallel to how you started focusing on the energy sector. Because were you an energy trader? Is that right? Or
yeah, I was. Well, I was financing energy projects, and my co-founder was investing in energy project, and I had a oil and gas career before, and we were both looking to switch career paths and do something more digital, more data oriented, and do something in that space.
How did you meet? Did you work together? Or?
Well, I actually we are longtime friends.
Right.
So we met through friends, and we discussed a lot ideas and potential opportunities, and we have slightly different background. Although there is a common ground on the energy side. I'm more a finance guy, and Laurent is more an engineer, and he has been a project manager and executive at Schlumberger. So we have slightly different skill set in that respect.
Well, that's interesting. That's because one of the questions I had to ask you is that when you're sort of co-founders, I always find that really interesting. Did you find it helpful to sort of decide who does what role, and are you quite sort of strong on, because you're the COO and he's the CEO? Did you sort of fight for that, or did you say, right, I naturally fit this role, or how did that work?
Well, actually, Laurent is very good at project management. He's good at building teams and taking decisions. and I'm more of a business guy. So I think we are very complementary. But we have a third co-founder, JeanBaptiste, who is a great CTO. He's the actual brain of the team, and he's the guy behind the machine. So he has always great ideas.
Yeah.
So our skill set are very complementary in that sense.
I'm really fascinated about startup teams, and how's it been? And how did you know JeanBaptiste? Was he someone that you brought into the business? Did you know him as well? Was it?
So actually, Laurence first started Allphins when he was right after his move from Schlumberger, and he wanted to build a minimum viable product, and he hired JeanBaptiste to build something, and eventually JeanBaptiste joined as a co-founder, and I joined later on as the business needed more, as the company needed more input on the business side.
Okay.
So that's how it worked, and I was based in London. I'm still normally based in London, and it was a great way to approach the insurance markets.
Yeah. Because the business is your business is not headquartered in London, though, is it? It's
No, it's headquartered in Paris actually. So JeanBaptiste and Laurent are based in Station F, which is the world's largest campus for startup. And it's a great place. It's a great ecosystem to gain some visibility as a startup. And we also recently got nominated among the top 40 startup within Station F among 1,000 startups. So
wow,
we are very happy to be there.
Yeah, no, that's congratulations. That's great. That's great news. And so they get to be at the lovely Station F with all the funky startups, and you have to be in London, walking the streets of London. That sounds unfair. So, was the business bootstrapped? Did you go out for investment? What stage are you at?
So we are still at seed stage, and we haven't actually pre-seed stage. We haven't raised any external funding yet. We've bootstrapped the company for now. We are still a very lean team, and we have a product, a market-ready product, and we might grow in the next few months and start thinking about raising later on. But that's another subject. But for now, we've bootstrapped.
Yeah. So how did you come to this insurance world? Because I understand you might be looking for different things to do, but I'm always intrigued by how people end up in insurance.
So we were both working, Laura and I were both working in oil and gas, in the energy space, investing in projects, and we had to deal with the insurance aspect of an investment from time to time, and we realized that insurers were probably not making the best use of the data and analytics that was available. So we thought insurance were a good place to apply those insights.
Yeah, and is it that you present the data differently or interpret the data differently, or are you bringing in new data to the insurance market?
So I feel like where we are very good at is at recognizing risk. And so on one hand, you'll have insurers who would receive a list of installation to insure. And on the other, you have a lot of data sets available, either open sources or third-party data sets. And what we are really good at is at combining the two, and and combining them in one platform, and recognizing each risk, linking them with assets from a database. So it's about enriching risk. It's about recognizing risk. It's about delivering analysis, but I think all the framework are already existing. So it's more about connecting policies with data rather than reinventing the wheel on the analysis front.
Yeah. Were you surprised about what the insurers didn't know about those risks, or where the gaps were? Was that surprising to you?
Well, no, they know what they don't know, and they consider themselves as insurers, not tech companies. So they are very happy and proud of their advisory and client relationship capabilities. But they also understand that they might have to look elsewhere to get the best out of tech and data. So they're always willing to have a chat and explore new technology. So that was a very good surprise for us when we started this this journey, is to have access to a lot of people ready to answer or sometimes not so intelligent questions.
I've always loved that about the industry, and I've been working in this industry for about 15 years now, and only the first year I worked in insurance, and then I've worked as a headhunter since then, and I'm amazed still how I can pick up the phone to someone that, yourself, we didn't know each other, and I just said, do you want to have a conversation? And I think there's something about the industry that probably a little bit comes from the Lloyds setup or subscription markets generally, that they collaborate naturally. That the industry is very happy to, answer questions, and I would say the same as you. I ask plenty of good questions. I ask plenty of really stupid ones as well, and I very rarely get treated badly, and it's quite unique in that. And you only know that when you come from another industry. And I think I wasn't aware of that, but then working with some colleagues who maybe focused on even banking or technology, and they got crucified for what they didn't know.
Sure.
If you didn't know, you were not allowed to ask stupid questions. So it's really good for that. And I've got a question here about AI, because your service uses AI to kind of deliver some of the solutions. How does it apply in the context of what you do? Where does the AI come into it? Because AI is such a term that gets thrown around, so I always want to dig into. So what is it doing in your service?
So we see AI as a lever to allow for more efficient processes and a new level of analysis. For example, we use AI to identify risks. So it always applies across the underwriting process in very specific circumstances. That's how we use it for now. So, for example, in upstream energy, insurer would receive a list of 20,000 risks. Each installation can have multiple different names. And it's very difficult for underwriters to identify risk, platform installations, and to calculate a clean exposure, aggregate exposure quickly. So we use natural language processing to identify platform, recognize the names, and then link it with an asset from our database. It's one example of how we use AI. It's usually in very specific circumstances.
Yeah. No, sure, that makes perfect sense. I mean, I think one of the things that's been interesting for me is looking at the use of AI, and it was a term that there was a lot of times where I was very skeptical. I think there's a lot of times the term is used, and it's either not really truly AI, it's like it's probably an advanced chatbot or something, you know, sometimes. But I think the big leap in actual the practical application has been natural language processing and the ability to do that, because that's the challenge, isn't it? Really, with insurance, a lot of it is there's data, but it's not clean. There's data, and there's a lot of it that's written down. It's language based, and until AI got to the point where it could be effective on things like, you know, language processing, then it had limited application at that point. But now it seems to be the floodgates have opened, and it's really truly applicable to insurance.
Yeah, it's very effective. So in the natural language processing case, we are our tool is continuously learning new words, new combinations, and matching better.
Do you see tools like this? Because obviously the logical progression, and I think the fear of the industry is always that, you know, the robots are coming, and the AI will AI replace, you know, underwriting? Is there a case for that, do you think?
Well, I see AI improving the efficiency of insurers tremendously, and more than AI, technology is really revolutionizing the way how simple and commoditized risks are processed. Now, for complex risk, it's a bit of a different game, and there are very limited technologies that support insurance for complex risk, such as energy, factories, plane, vessels. Those risks still need, we think, a lot of analysis and dedicated tools, but they're not going to be completely automatically processed, and a human still has a lot to do, and we are more a tool to enhance and supercharge human judgments rather than replace anyone here. But yeah, very simple risk might be in a different position for sure.
But I still always see that as a really positive move, because if you speak to less underwriting, I mean, I was talking to someone about claims, and but it applies to underwriting as well. The reason underwriters like doing the job, and the reason that the claims people like doing the job, is the big and complex risks.
Yeah.
The vanilla, you know, simple risks or low value simple claims, people don't really want to spend their time. And I'm just talking about someone that talks to people about, do they enjoy their job? You know, my job in the recruitment industry is about, do people enjoy their jobs? Are they happy? And they're happiest when they're actually challenging themselves on the kind of complex stuff. So any tool or any move towards removing the need to deal with the kind of more mundane, more vanilla stuff, I think is important. And then giving them a tool to help them deal with kind of more complex risk is just a massive benefit, I think. Yeah. So you and I touched base about the Lloyds Lab. What cohort were you in?
Cohort 3.
Yeah, 3. What was that experience like? What stage were you at when you got involved? Had you built the product, or were you?
Yeah, so we were actually pre-revenue and we hadn't secured any clients yet, but we had a lot of conversation with many underwriters at the Lloyds Lab, and they were very happy at the Lloyds of London. They were very happy to talk to us and have a chat. So they supported us into our application for the Lloyds Lab. We just had a minimum viable product.
Yeah.
And we were lucky enough to get accepted into the lab, especially because the cohort 3 was meant to be more focused towards seed, more advanced startups.
Mm-hmm.
For us, it was really an eye opener, and it really enabled us to get a very good understanding of insurers' pain points. So you have mentors who are working at the Lloyds of London, who are underwriters, exposure management, and you meet them on a weekly basis.
Mm-hmm.
It's tremendous source of information to understand their challenges, their pain points, their objectives, and to craft solution to help them get there. Yeah, you are right in the center of the insurance market.
Mm-hmm.
It's as good as it can get.
Yeah.
And it's also a good environment to be surrounded by other startups. You know, you can share ideas, you can talk with anyone. It's a good spirit as well. Now it's not a typical incubator. It's not a mini MBA. It's not a place where you'll have tech people helping you improve your tech side. But it's perfect to meet clients, understand their problems, and the ecosystem is great. So I highly recommend.
Yeah. I think the big thing that I've spoken to quite a few people from the Lloyds Lab now, and one of the big things is about the interaction with essentially your customer base, right? You get to talk to these people are going to be your customers, and you get to spend time with them, and really with no. Obviously, there's some pressure on it because you don't want to. You're happy to ask the odd stupid question, but you don't want to be. You want to present yourself as being fairly smart, because otherwise, it doesn't look great for the future. But I had a question here to ask you about. What's the kind of like biggest lesson you learned from? I was going to ask you three, but I think that's a bit mean. So I'm just going to ask you, what was the biggest lesson you learned from the Lloyds Lab experience from your customers base, potential customers that perhaps you weren't aware of, or what's the biggest sort of customer takeaway you would say?
So I mean, we really realized that moving from unstructured data to structured and clean data sets was a very important challenge for the industry. It was a very difficult challenge for the industry as well, and difficult to solve, especially for complex risk. That's I think that was our biggest lesson. We had to find ways to help them to get more clean data sets.
Yeah.
And as you mentioned, it's meeting with people from the lab, your mentors. They are both your potential customers, but also a source of information. And it was great to understand their pain point. They also have another aspect that is very challenging, is the fact that their organization is quite there are many teams that are working in silo, so they don't talk much with one another. So the claim people wouldn't barely talk with the underwriting people, which is quite strange when for an outsider. So we tried to build tools as well to help to better foster communication with an organization.
There's a lot more in the culture and politics of change, and I say change because I'm not keen on innovation too much, because technology doesn't equal innovation, but looking at things in a different way does. But I think there's a lot more in culture and politics about kind of trying to bring change into a business. How have you found trying to get over the line? So you built the product, you had your MVP, and then you're trying to get it out there and get those first customers. How was that? And how long did it take you to get your first customer? What was that sort of journey?
The sales cycle in insurance is very long, you really have to prove that your value proposition is solid, and you have to meet the right person within your targeted organization that will be your champion and market your product within the organization. And there are multiple decision makers. It's difficult to navigate, so it's important to have that person. And we were extremely lucky to find our first customer and to find that person within Transray, our first customers, who really supported us to implement our solution and to make the business case and to drive change. But it's a long process indeed.
Yeah. Did that surprise you? Were you prepared for that, or?
No, I don't think we were. We knew it would be long, but experiencing it is even more difficult.
And I think that's why I was sort of making that highlight around culture and kind of, because basically it's difficult when you've got a solution like yours, which obviously adds value. I've obviously not seen the product from a technical point of view, but I'm assuming that because it's a data-driven tool, if it didn't provide better data, you wouldn't have a product, right? You wouldn't have a service. Yeah. So I'm assuming that it works, but you provide better data. It's very easy in a way to demonstrate that works. So in many respects, you go, as long as it's priced right, it should be no question. You should be like, right, we write energy, we want better data, we should bring this on board. But there are so many factors that go into whether that, you might win the person over that works on underwriting, but like you say, the exposure management team might have a conflicted interest in that, and the claims team might have something to say, or there's so many moving parts, and that's ignoring affordability. That's ignoring whether the budget's there. That's just whether people's opinions match. I feel your pain. Having worked in this industry a long time, it's it's a 300-year-old industry or something. So their timescales are probably not the same as a startup. So.
Exactly.
Where have your customers all been? You mentioned Transray, but have you targeted kind of clients internationally? Have you focused on the kind of London market to start with, or it doesn't matter?
So we started in the to tackle the energy class of risk, and we are soon expanding into other verticals. So most of our clients are London-based, and some of our targeted clients are also based in the US, in Bermuda. So we are covering both insurance and reinsurance. Because we found that our tool is very useful for reinsurance as well. So we are targeting some customers in Bermuda. So I think 60% of the energy market on the insurance side is London based. So the Lloyds Lab was the perfect place to be for us.
Did you get any? Have you pitched to any of the people that were your mentors? Have any of them taken you up on the product yet?
Not formally, but
Yeah.
we are still very much in touch with them. They are providing us feedback. It's a type of informal, I would say, pilot, where we develop something for them, and they provide us some inputs. We haven't formally moved to a proper partnership agreement, but it was interesting to see how the move, how the client relationship moved from the Lloyds Lab, where we were trying to understand and solve a problem, to switching to a more commercial discussion. And actually, most of the mentors were very keen to have this switch right at the end of the Lloyds Lab. So after the demo day, they approach us to meet with some other decision maker within their organization to move the process forward. But yeah, it takes time, especially because our mentors were the leaders in their respective markets. So they are big organization.
Yes, yeah, of course, and that's I suppose that's the challenge in the energy market as well. You're talking about big numbers, and you're talking about big organisations. I mean, it's challenging to drive change in those. So you said you're moving into different markets. Is that a decision you made from customer feedback, or is that just you see that the product is naturally kind of fits with those markets?
Yeah, we realize that there is a fit between where we are good at and what the market needs. So we realize that a lot of insurers still had needs for visualization and quickly processing insured data to map, to enhance their scale of value or policies with external data, and to generate analysis. So we thought that same methodology could be, well, what we were effectively doing in energy could be applied to other classes of risk. And the natural language processing technology that we developed, that I mentioned before, could be very much useful to other classes of risk.
Yeah.
So we took the decision to expand and look at other areas as well.
And does that mean that you're going to have to grow as a company? Will that mean that you need to go out and get some investment at this stage, do you think?
Yeah, it'd probably be the case. So we are about to start a pilot in cargo, in stock cargo. We are looking at aviation, and in 2022 we hope to look at commercial property, industrial factories, and things like that. So yeah, we might certainly need to grow the team. We can't be a free guy startup anymore. We probably will have to expand and grow our capabilities.
Yeah. Have you started any of the investment pitches yet, or are we not in?
Not actively. So the Station F being nominated among the top 40 provided us with a lot of visibility. So we got contacted by a lot of potential investors, but we haven't formally started any process, and it's a strategic decision that we need to be comfortable with.
Yes. Yeah. So, and the thing is, the problem about getting investment is it becomes a full-time job getting investment, right? And then you've got there's only three of you as it is as a resource, so you then become, our job is just getting investment, and then it can drain your time.
So that's very much the case. We are hopefully about to close some long-dated commercial efforts, and we want to focus on those within the next few months. But things might be different in early 2021. Let's see.
Yeah, well, let's hope so. Let's hope so. How has this year been? How have you been impacted by the pandemic? Has it slowed things down? Has it been kind of as you expected it to be?
Yeah, it's not that I expected anything from the pandemic, but it has slowed down our marketing efforts and development process for sure. But we find that underwriters are still available through Zoom, and sometimes it's even easier to get them on the call and on the video chat because everybody is a bit bored at home. So.
But someone got offended. I said that to someone the other day, and they got offended, and I think. Yeah, they were going, I don't think people are talking to us because they're bored. And I'm like, I think they do a little bit. I've definitely got meetings with people on Zoom that I would never get a meeting with physically. But there's kind of less barriers and it's efficient, right? You're saving that 15-minute walk to the meeting room or the coffee shop or wherever you were going to do the meeting, and that's either side.
Very much.
Having said that, someone said to me the other day, the problem with the Zoom call is that if someone says it's got a half an hour Zoom call, you feel the need to do the half an hour. Whereas, like, if you're having a coffee, you might just have a coffee and go, right, thanks very much, off we go. I don't know, but I think that's why I asked, because I thought, interestingly, I think in some respects it's been helpful, but yeah, most of the time it's been an absolute nightmare. It's just slowed decisions down, and I would imagine that in your world, when you're trying to bring in new technology into a business, slowing down is not helpful. Yeah. But I didn't want to end on a negative note, but that's kind of where I put to. So I'm going to ask you more about what's 2021 look like for you guys. It sounds like you're closing some things out, which would be a nice way to finish the year.
Yeah, very much. So our roadmap really consists of expanding, as I mentioned, across other verticals. I think, we look forward to expanding our product line and hopefully closing some commercial efforts within the next few months. And maybe raising some fundings at one point. So it might be an eventful 2021.
Yeah, well, I had a very positive conversation this morning about someone saying that all this change that hasn't happened has built up a debt in the industry, and that debt needs to be paid next year. And we're both hopeful that's the case.
Let's hope that.
But Antonin, thank you so much for your time. I'll conscious everyone's time, so I'll sort of bring it to a close there. But really excited to see what you guys get up to next year. And I wish you all the best, particularly going into the new markets. And congratulations once again, because I didn't know that you'd been voted in the top 40 for Station F, because that is, I know what an accolade that is. So congratulations on that.
Thanks so much, Alex, for having me today.
Yeah, not at all. You're welcome. All the best. Thank you.